Greetings, folks. You have reached DC Investing. I've reached financial independence, and I'm talking about topics that might help others to also reach financial independence. So, good job for finding the channel here. Today, I wanted to talk about a method to find individual stocks to invest in. And one way to do that is to take a look at the ETFs in a particular sector. There's an ETF stands for Exchange Traded Fund. Um, and if you look up online sector ETFs, that can give you a list of various funds that uh, buy stocks within different parts of the economy. Once you find one, you can look at the ticker for those and then do a search for whatever ETF and look at the holdings within those ETFs. And the reason why you might want to do that is because it can give you ideas on individual stocks, because those ETFs are holding the individual stocks. You might not know of them, but some of these professional fund managers have spent a lifetime learning about this stuff, and the things that they select, chances are good investments. And so I did this in about 2020. I was really interested in the energy market, and I owned the sector ETF called XLE. It had a fairly high dividend at the point, and I was interested in the energy market because I felt like it was in a suppressed downdraft because of all the C19 stuff that was going on. So originally, I just owned the XLE ETF, but then I started kind of looking into it a little bit further. And one of the reasons why you might want to own individual stocks instead of an ETF is because an ETF charges a little bit of a fee. I looked up the XLE fee today, and it was actually really low. It was like 0.08%. It seems like it was higher a few years ago when I did this, but I could be wrong. Anyhow, if you look up the holdings, I had looked up the holdings for the XLE. I was curious of what were the companies inside of it that XLE owned. And, basically it was Chevron and Exxon. They made up the biggest portion of it. But then there were all of the other oil companies that were in there. And so it was just kind of an experiment. I thought, hey, I want to deal with these long term. And so I actually ended up buying the individual oil stocks because I didn't want to pay the fee, basically. And so I kind of just matched my portfolio to what the holdings were in XLE, and maybe I only bought the top 20 or top 15 or something. And it was a great time to buy those stocks because, in 2021, 2022, all of those had phenomenal gains in them. And it was interesting because the larger ones, Chevron and Exxon, I got a double out of those, but some of the smaller ones, man, they just went crazy. Like I think Fang was up a couple 100%, maybe 300. There were some smaller producers too that just went up astronomically. So, the overall ETF, it I think it just doubled. Maybe it hasn't quite done that, but it did really well. The big oil majors in it kind of matched that behavior, but some of the smaller companies had a much higher return. So that's one way that you can benefit by holding individual stocks is, in a particular sector, the smaller companies may go up a whole lot more than the bigger companies. All of these different things paid dividends. So during this time, I also, I got the dividends along with the capital gains that happened from these. Then I got interested in an ETF that dealt with oil pipelines, and its ticker was MLPA. This one buys master limited partnership pipelines, and I like this one because it had higher dividends. I think right now it's like the whole ETF is about 7.4%. But here again, I was looking at the expense ratio, and this one has a higher expense. It's about 0.5%. And so, I kind of looked at that, and the ETF gives you some tax benefits because master limited partnerships send you a K1 statement, and the ETF kind of fixes that. It's not good to hold MLPs inside your retirement account, but the ETF is just fine to hold within that. And so I did own some of it within my retirement account, and I owned some in the brokerage account. But eventually I was looking at that expense ratio, and I thought, I really want to own these things long term. And a 0.5% makes a pretty big difference. If you have $1 million invested in the market, a 0.5% is $5,000 a year, and that's significant. And I guess in general, fees are something you really want to be aware of in any investment you have. If you own an ETF or if you own within your 401k, a different option, the fees make a huge difference in your overall performance over the years. So I didn't like the 0.5% fee that the ETF charged. And so I just said, let's just mirror my fund or my brokerage account to be similar to what the ETF did. And so I bought the individual stocks that were within the ETF. And so for MLPA, I own all of them except maybe one or two of the small ones that don't really have a dividend to them. So I just own them outright. And what that does is now I don't have to pay the expense ratio or the fee that the ETF charges. And I've owned these for the past 2 or 3 years. So every year I have not had to pay that 0.5% fee to the ETF. I get it. And so that's one of the benefits of owning individual stocks outright, is once you hold them, there is no fee to just keep them in your account, and whatever the market does is what you get. And a way to look for individual stocks is to look at the ETFs and then kind of look up their holdings, and that may give you some idea. And you can do that with any of the sectors. Like, if you want to invest in consumer staples, look up XLP, find out the holdings from it, see which companies have the biggest weighting in that. Or if you're looking up real estate, look for that sector ETF. Or technology, look up the ticker for the technology ETF, and then find out, hey, what are the holdings inside there? What weights do they have? And then gives you ideas for things you might own or might want to own yourself. So that's kind of my results over the past couple of years. I shifted away from owning the ETF. I did have to take capital gains on it when I sold it, because the whole thing had appreciated quite a bit since I purchased it. But now I don't really own much in the ETF. I just own the shares underneath it. And the reason why I'm doing that is because then I don't have to pay the expense ratios. It does make it a little bit more difficult when you're selling, because I have to choose which of the many stocks, if I want to sell something, I might have to get rid of. It did give me the ability to do a little bit of tax loss harvesting. I think there was 2 of the pipelines that actually kind of went down during the time. DKL was one of them. I think I owned NEP, NextEra Partners, that kind of went down. So I did a little bit of tax loss harvesting at the end of the year on a couple of them that went down. I couldn't have done that with the ETF because it was just part of it. So that's one of the benefits. And then all of these pipelines, they individually all pay dividends, really high dividends. So they're kind of within the 7 to 8% range, most of them. I guess a few of them are a little bit lower, but overall, I'm getting a really high dividend yield by owning all these different pipelines. And I own more than just the master limited partnerships. There's other, just normal stock things or pipelines you can own, like Enbridge or Antero Midstream, or Williams, One Oak. So I learned about all these companies by looking at the ETFs and found out, hey, what do they own? Did some research, and that gave me ideas for different stocks to buy. So there's your tip for the day. That's how to find different stocks and sectors. Look up the ETFs, dig down, look at their holdings, find out what they own. Do some research on them, figure out if you like those companies, if you want to own them. And then if you own them long term, you don't have to pay the fee that the ETF charges for you. So there's some ideas. Let me know if you guys just own ETFs, or if you've dug down and wanted to buy individual stocks, or any other advice that you can give for anybody in the group. We'd love to hear your comments. So comment down below, like, subscribe. We'll continue to push out content that hopefully gives you ideas along your own investment journey towards financial independence. We'll see you. Bye.